All right. Welcome back to the Economics of Real Estate. I'm Dylan Silbernagel. That's Matthew Gizzie. This is the show where every month we break down what's happening in the GTA housing market. We talk about what is impacting the market and talking about some of those policy changes that are impacting there as well. Matt, how are you doing today, buddy?
I'm good, man. I'm good. I'm excited for this. We've got a lot to talk about today. There's definitely a lot of challenges in the market, but I think some areas there's definitely some things to take advantage of for some buyers and for some sellers.
For sure. As we talk about where we should be this time of year in spring, we're usually upticking in terms of both median and average sale price, as well as transaction count. And that's just not the case for us this year. Currently, we're actually, I think it was the worst March since 1998 when you look at transaction volume, which is a pretty astounding number. And when we get into the charts, you'll see the visualization of that. But we actually sold more homes at the very beginning of COVID in a lockdown where we'd been locked in our houses for the first time in forever. We were able to sell more homes than we are right now. So we know that it's not interest rates. We know that it's buyer confidence being the big issue that we're seeing out there. So, I think it's one of those things we're all talking about, and we're taking one step at a time. What's important and what we hope you get away from this show today, we hope what you get out of it is if you are a real estate agent, breaking this down will help you better communicate what's going on in the market to your clients. And if you are a homeowner or potentially a home buyer, where you can find some opportunity as well as just acknowledging what is going on in the market. So jumping into it today, we are going to be covering what's going on in TREB overall, specifically the GTA freehold and condos. We're going to talk a little bit about that consumer confidence. We are going to jump into Simcoe freehold and condo as well as York freehold and condos. And if you want to make sure you don't miss an episode of this show, check us out at the Economics of Real Estate on YouTube. So that's youtube.com/economics of real estate and subscribe there. We have videos going out pretty much every day of the week now, Matt. We've been very diligent about breaking down all of the conversations that you and I are having and getting it out there for people to take advantage of.
Yeah, we've got the long form up. It's about 2.5 hours, but we've broken it down for every kind of York region, GTA, Peel, Waterloo, Simcoe. We've even broken down the lease reports for York region and for the Simcoe region, as well as talking about some of the other issues, economic-wise, that's potentially affecting the market.
Perfect. And so on that note, let's first jump into interest rates because it has been just one of the biggest topics for the last year and a half. And I think the great thing is we can start to see we're getting relief there in comparison to where we've been. We've come down quite a fair bit. And now with all of this talk of what's going on with the economy and the messaging coming out of the States, we're actually getting more cuts than what were forecasted originally for this year, which is a great news for borrowers. So currently we're sitting at 2.75. It's likely to stay there for this month. This is updated as of April 3rd. But come June, 78% chance we get that cut to 2.5. And Matt, when we were looking at this back in the fall and even as late as December, 2.5 was like a 50-50 chance, I think, by the end of the year originally. So it's interesting to see how all this, I guess, let's call it turmoil or uncertainty, is impacting the Bank of Canada's policy rate.
Yeah, so it does look like we'll probably get 3 cuts this year as things state right now. Of course, things can potentially change as the year goes on. But as of right now, we're looking at least 3 cuts by the Bank of Canada.
Yeah, 3 more.
Now, 3 more cuts, which will help the variable rates as they've closed the gap significantly from where we were at the 5-year fix. 5-year fix had such a big gap there that a lot of people were getting into the 2-year, 3-year, because even those were significantly cheaper than the variable. But now the variable and the fix are getting pretty close here. We can see at the bottom where variables are on average over 10 lenders, 4.4%, whereas the 5-year fix is 4.26%. Now I know you can get lower rates depending on which bank you go to, but this is just a general average. So we've seen them come down quite a bit.
Yeah, I think it's a fantastic thing. But here's the flip side of that. Why is the Bank of Canada lowering their rates so much more than we anticipated? We're having some challenges with our economy and what's going on, especially with these looming tariffs that been implemented, not implemented, changing. And talk to me here about small business optimism in Canada.
Yeah, I mean, small business optimism's fallen off a cliff really to 25-year lows. And if we go over to the next chart, we can see just how low it's come. The last time, even during the recession or the Great Recession in 2008, 2009, business confidence went down to around 45. We're down to 25 on that confidence scale. So it's really fallen off a cliff here, and that's having a lot of stress on what businesses, because businesses don't know what their input costs are going to be in the coming months, days. So they don't know, how much are we going to have to increase our prices? Are we going to need to lay people off? So there's a lot of uncertainty there for them, and we're also seeing that when it comes to buyers as well. They're thinking about that too. Is my job still safe? Is my employer going to let me go because they're having less confidence in the market right now?
Yeah, and I was just looking before we started our show today. The buyer confidence Canada wide hasn't been updated there since February. We did see a small uptick in February. Now it was very, very small, but we're still down from our last peak there in August, and it dropped quite a bit, bottoming out there in December. And so I'm curious to see what comes now with March, because even that little uptick was a little confusing to me, because it's not being reflected in the market that we're seeing. It's not being reflected on these charts. It's definitely not being reflected in the news. So I do anticipate that we'll see that roll over again towards the downside.
Yeah, I agree.
Okay, now when we're talking about future price versus wage increase plans, so here's a survey that was taken across 1,065 responses across these small businesses. So in the next year, how do you expect average prices to change? And how do you expect your average wages to change? So Matt, talk to me about how we're seeing this deviation here at the end of where we're currently standing in comparison to years past.
Yeah, so if we see the dotted line in the middle, that's kind of the average. That's the historic average of this chart. So typically, we fluctuate between 2.2 on the average price plans and 1.9% on the average wage plans. So we can see the wages have actually come down to its historical average. But the interesting part of this graph is the 3.7% that we're seeing average price plans increase. So typically, if the average is 2.2 over the years, and really this got skewed because of what happened in the COVID pandemic, driving it up to 4.9%. So it stayed above that mark for quite some time. So realistically, that price should be more in line with the 1.9%. So we're heading up to 3.7%. So we might actually start to see inflation come into the economy as these businesses start to increase their costs of their goods and their services.
Yeah, I mean, that's where it's trending to, right? We don't have our markers in here, but I'd say we're at least 2021, 2022 levels in terms of where we're future pricing some of these business products.
Yep.
And like you said, there's a big gap that's starting to form now between our anticipated wages and where those prices are. And
the problem with this too is if it goes back up to the 4%, it's going to take a year or two or three to finally get back down to that 2% line. It rarely just falls off a cliff, so it will take time to start to adjust back to that. So that's another unfortunate part about what we're seeing right now, is that these increases might last a little bit longer.
Yeah, well said. This is an important one to note because we do have a federal election coming up, and we just want to be mindful of what we've done GDP-wise for our country in terms of how we're all doing. What kind of production are we sending out here? And to be honest, when I first looked at this chart, Matt, I saw the green highlight. And I'm like, oh, that must be Canada, because of course that's what we're talking about. But no, that's USA. And then you got to keep coming down our list, and you find us down here pretty close to the bottom with only a 1.4% increase from 2015 to where we are now. Now, we need to talk a little bit about why this could be skewed, and a lot of that's through immigration. But nonetheless, our output is pretty abysmal from where we should be for the nation that we are.
Yeah, absolutely. We've got a couple big factors. I'd say the two biggest factors are that the population growth. We've had one of the biggest population growths out of a lot of the G7 countries, out of a lot of countries, to be honest with you. We had such a rip to the upside for immigration that, it diluted the per capita figures. So that had a strain on it. And then, but we've also got a stagnant productivity growth in this country. And that's what's weighing on it as well. And a lot of that has to do with, just how much money's gone into the housing market. It's been one of the biggest drivers for GDP in this country over the last decade. And also business investment. We're not seeing enough business investment roll into some R&D that this country desperately needs, other than just focusing on one industry, which has been, like I said, the real estate market.
Yeah, and then talking about like our major trading partner there, the US, how we rely so heavily on them. I think that one of the best things that all this tariff talk has brought up is that we do need to diversify with our trading partners and not rely so heavily on one. We talk about this in our business a lot. If you're relying everything on one contract, like one big subsection of your business, you're exposed to a lot of risk if anything ever was to happen with that one type of client. And that's kind of where we are now in terms of what Canada is going through economically with what's going on in the States.
I think there'll be a lot of trade in between the provinces now. Hopefully that opens up the border, because there are quite a bit of restrictions on that. And also, hopefully, whoever the next prime minister is, they start to form new relationships with new trading partners so that our products are going around the world.
Yeah, well said. All right, so let's jump right into the housing insights that we have here for the GTA. We're looking at across all home types. And Matt, when we look at all home types, we had a nice little boost here for our month-over-month numbers in terms of median price. Now, when we look at year over year, we do see a drop, right? We're down that 3.7%. I was taking a look with somebody just this morning. We were looking at Aurora on the benchmark pricing. I want to say we were down 4.7% year over year for detached houses in Aurora. And that feels more across the board that I'm seeing in specific areas, is that generally speaking, year over year, we're in a decline there. We're in a bit of a loss for percentage wise in median price. And the reason for that people need to remember is that we had a pretty solid start to 2024. We saw low inventory there for a little bit. We saw multiple offers come back. We saw a lot of transactions happening, and with that median price going up. And that is not how this year has started. We started right into January with these looming tariff talks, and everything slowed down. And most importantly, like you and I talked about, we started the year with 50% more active listings than we had in 2024. I think that's just the challenge.
Yeah, you're right. We really did rip up to the upside when it came to the beginning of the year. It came up quite quickly and then kind of stagnated throughout the year. So definitely we are seeing a little bit more pressure on the year over year numbers just due to the strength of the beginning of last year.
Yeah, and so month over month, we see a bit of an increase. Again, it's not much. What we would expect to see a much higher number here in our traditional markets this time of year. Of course, you see here we're still down 30% year over year in terms of transaction volume. Median days on market going down just a little bit, but we are up from year over year, and termination volume going up. Matt, we talk about this as sellers work to get their pricing just right to hopefully snag one of those few buyers that's out there currently looking.
Yeah, and it's a big thing that the termination volume. I think it'll be a story across the board from all the places that we're looking at. Yeah. A lot of places terminating their listings, either taking them off the market and waiting or repricing.
Yeah, absolutely. And so here we can see active listings in comparison to years past. Again, this is across all home types. So when we break it down, condo to freehold and even freehold to detached, we do start to see a bit of a different story. But nonetheless, when you're seeing those news headlines about what's going on in the Toronto housing market, this is the active listings that we're seeing pile up. And again, we are outpacing every year going back to 2010. And when we move in here to sales volume, again, this is the uptick that we usually see from January, February, March. And while we are increasing month over month, it is at a much slower rate than we are used to. And when we take a look at even the yellow line here for 2024, you can see that uptick that we had January to February was nice. still continuing on into March. And then, like you said, got a little stagnant for our rollover for where we were last year. And it's funny, a lot of the numbers for last year, we got our first cut there in June, but it seemed like everything kind of hit a wall once we got that first interest rate cut.
Yeah, it did. And the thing with this chart too is we're starting to head to the upside, but the rhetoric around the Trump tariffs and then now he's escalated it with the reciprocal tariffs around the world, and the stock markets are starting to take a hit that is going to definitely have a big effect on consumer confidence. We're going to likely see over the next month coming into April some weakening numbers, much like we did during the pandemic.
Yeah. Yeah. Very, very interesting times to be around. And here we go with the uptick in terms of months of inventory. So when we look at months of inventory, again, we use this as a metric a lot of the time to find out what type of market are we in. Are we looking at a seller's market, a more balanced market, or a buyer's market? And as you can see here over the last, again, this goes back to 2010, much heavier in a buyer's market than we've seen in the past.
Yep.
Taking a look at condos, Matt, why don't you jump in here and talk to me about what happened in the condo market last month?
Yeah, so last month we saw a little bit of an uptick in price, up 1.1%. We saw the transaction volume increase 9.7, which is good, especially with how much, how much stress is on the condo market right now as a whole. So that was good to see that we started to see some more transactions, having the price up. We did get 26% more new listings month over month. Days on market was flat, and the termination volume was around 50% of the properties were terminating. And then when we're looking at the year over year, we are down 5.8%, which is much more than the freehold market. Transaction volumes around the same as the freehold market, down to about 32%, 25% on the new listings volume. And then days on market significantly up from 17 to 22, so 30%. And then the termination, pretty much the same as freehold market, with 70% on that end.
Yeah, and as we come into our chart here, comparing to where we've been over the last 15, 14 years or so, again, you can see the active listings. We're up 48% year over year. So here's our gap from 2024, which this is so familiar to my experience last year as well, as we had a lot of condo sellers, and it was like month over month, we were just getting so much more active listings, so much more competition out there for the sellers, and a lot more choice for the buyers. And what we find with when that choice kicks in, I'm going to skip a couple of, I took out median price, that's right. You usually see downward pressure on those prices as you have more choice there for buyers, especially when we come into this next slide here, Matt, where we take a look at our sales volume being down 34%.
Yeah, and I mean, this is exactly why we've got such high active listings. We have so little sales. And, again, the biggest reason for this is confidence. We saw coming into the end of last year, we started to see a pickup in sales in the market. There was confidence returning to the market. Unfortunately, right now, we're in this little window. Hopefully, it's just a small window of where people just don't know whether to get in, whether to stay on the sidelines. It's our job to kind of educate them, show people. There's a lot of people that can transact in this market right now. They're just thinking, they're looking at a bigger picture and not understanding that if you already own a house and you're going from one house to another, it's okay to make that sideways lateral move in any type of market, as long as you're going from, same area, let's say, or you could be going from an area that's still held up quite well, and maybe you're going into an area that's struggling a little bit. So you're going to actually get a deal in that area.
Yeah. Yeah, absolutely. I think it's important to note that when you are buying and selling in the same market, it becomes all relative. And then the important thing that I like to acknowledge about when there is a down market is it is a perfect time for you to make that move up step, because our homes that are at those higher prices, when they're losing 5%, it's a much greater number than when you're losing 5% at the lower price point. And the lower price points also, they seem to hold their value better in general because there's more buyers that can afford that price point. So if we're looking at Aurora, for example, year over year townhomes, there's like almost a 0% change. It was like 0.3% change. But then when you move into the detached market, they're down 4.7%. So if you're moving up from that townhome to the detached, you've technically made money in terms of what that would have cost you had you done it the year before, where there was a larger spread from what you would have sold your townhome for what you could purchase your next home for. So when the market does turn around, as it does, right? As it does, and as it can do quickly sometimes, that you're coming out on top. You've got that equity already built in because you made your money on the purchase side. You didn't need to wait for the sale to happen to make your money.
Yeah, and I think as an agent, like, ask the client, okay, where are you selling your property and where do you want to move from? Have a look at both those markets, both those, if it's a detached to a detached or a semi to a detached, have a look at those markets and see what the change is, because it might actually make sense for that client to make the change now.
Yeah, absolutely. And like you said, sometimes it's not necessarily a move up or a move down. It may be a more lateral move. But if you're moving from Aurora to Georgina, for example, and one of those neighborhoods is getting hit a little bit harder in terms of what's been going on, same opportunity arises. You can make more money on this purchase because one's been hit harder than the other. So again, there's opportunities out there. You just have to watch for them. As we move into York, we want to talk specifically about the freehold market. And it's interesting to see here, as we look at our median price there, took a little bit of a hit month over month. Now, it makes sense when you're looking at what was happening in the world. And I feel like everybody just kind of got consumed with everything that was going on in the States. We were boycotting, we were taking alcohol off shelves, everything slowed down and was just this one main focus. But again, this is not what we traditionally see this time of year or what we would like to see. Specifically in the freehold market, to see that 1.9% decline month over month.
So we don't have charts for this. I was actually doing it this morning, but I wanted to kind of go through all the York region towns and see what kind of months of inventory do the detached have. Now, this is freehold, so this is detached and your townhomes, but detached by itself, Aurora, 9 months of inventory. East Gwillimbury, almost 7 months of inventory. Richmond Hills, 9.09 months of inventory.
Yeah.
So I think we're seeing a little bit of stress on the detached, and I would say that these are more the expensive areas as well. So likely on the higher end, there is a little bit more months of inventory piling up for the detached market in York region.
Yeah, well said. And it's important to note those differences. And I will say that particularly in Aurora, Matt, as you and I previously, when we would break down each price bracket for this, we really saw a glut of inventory in that 1.75 up to 2.5. There was just a ton of active listings sitting there with very low sales volume.
Yeah.
Oh.
Is that me?
That's me. My apologies. All right, so let's keep moving through. We did see, here's again, as we come back into looking at year over year, we are down 7%. And that's predominantly because of the two very different times that we're sitting in. This time last year, we were just coming off of a pretty good increase, a pretty good start to the year. Whereas this year, we're coming off a lot of uncertainty and a lot of more stagnation. So I anticipate that these numbers will soften out in the coming months as we started to taper off a little bit last year through April, May, and June. And hopefully, Matt, I'm still optimistic that there is a world where it's not that tariffs need to go away. It's that we need there to be a new norm. We need to get that certainty back that, okay, we're stable. This is the reality of the world again. And then, like you said, businesses can move forward. Businesses can start planning. They can adjust however they need to. That correction will happen. And then everybody can move forward. There can be more job security and people will get back to being able to transact. So once that happens, I can see this turning around quite quickly.
Yep. I think possibly like the rest of April is going to be a little bit tough, but we're going to have a new prime minister by the end of the month. And hopefully by then, he and Donald Trump can negotiate, get this trade thing done with, and start moving forward.
Yeah, absolutely. I think that's important to note as well. We have our own federal election that's coming up this month. And until that's done, I think things will just be kind of cruising as they have been. We're not going to get back to any meaningful change. When we're looking at new listings, specifically across the freeholds in York region, status quo, I would say here. We're not up, we're not down. We're right in the middle of where you would expect to be for this time of year. The difference being that our sales volume is so down. And so what that does is it trends us a little bit higher, Matt, here in terms of our active listings being about the third highest year in the last 14 years.
Yeah, and if it wasn't for, I think, townhomes and semis being extremely low, actually, I forgot to mention this, they're down in the 2 to 3 months of inventory. So very tight market when it comes to the semis and the towns, and I think that's what's keeping us below those other 2 years. But we are starting to increase. We're probably going to get to a little bit more in April, and it is a 64% increase from 2024. We have seen worse years, but I think the cheaper of the freeholds are holding us holding that together a little bit more from being worse than those other 2 years.
Yeah, absolutely. And so now talk to me about the bulk that we're seeing here from January to May. And of course, here we are at the bottom. We talked about this being the worst March since 1998 in terms of the whole of the Toronto Regional Real Estate Board. York Region, of course, was a big part of that, gets impacted as well. We're down 38% since this time last year. But talk to me where we are here.
Right. So, I've drawn this little chart here on the left just to kind of show that for the year, the bulk amount of the sales are done in this little time frame. This is when you're going to get a lot of the peak sales for the year, and then it kind of drops off for the year. But the purple line is during the pandemic. Yep. And the pandemic was the last time that we had a consumer confidence issue. People didn't know how bad the pandemic was going to get, just like people don't know how bad the tariffs are going to get. So what we ended up seeing was a whipsaw to the upside for later in the year. And I really think that's what's going to happen this year. And it's going to be, if we keep going sideways like this and everything kind of shifts back to the new normal and people get back into that market, we could see a 2020 whipsaw at the end of the year. And it could even be just as strong, if not stronger than what we saw in 2020.
Yeah. And look at this, because again, this is exactly how it felt. It was the busiest summer in 2020 because we missed out on all these sales here. And once that turned around, and it's funny because I don't remember in the pandemic things all of a sudden being rosy as of May, but at least we knew what was going on and buyers came back in a flurry. And again, like you said, it pushed it down the year just a little bit. We had what would be a late spring. This big uptick that you're seeing every year in here, we just moved it into the summer. And like you're saying, if our federal election is done, and if we come to some kind of agreement or stability, at least around the trades and tariffs, I think you're right. I think this is very likely to be something that we'll see. Whether we hit those levels or not, it's going to be a drastic up change from where we are today.
I think this is the biggest takeaway from today's meeting now is that don't get discouraged because sales are low and all that right now. There's a possibility for the final 6 months of this year to be very, very busy. So keep putting the work in right now. Mm-hmm. Keep speaking with the clients. Be front and center with them, because if this turns out as like 2020, there's going to be fantastic opportunities for you and your clients towards the back half of the year.
Yeah, I think it's a great reminder for those working with buyers or for buyers in general. Where do you want to buy? Do you want to buy when it's down here, or do you want to wait till we get back up here? Because we are going to see a couple more rate cuts, but I wouldn't let that stop you from taking action now. Well, we know that we're low with this potential to go high. We know that the main reason why we're low right now is because of consumer confidence. We don't know what's going to happen. It's that uncertainty that's doing it. The rest of the indicators are showing that we should be busy. Rates have come down quite a lot from where we were this time last year. There's going to be continued cuts coming through. We have a backlog of buyers wanting to get into the market because every year we're much higher than where we would be sitting currently. So even just seasonally, we've got a backlog of buyers. So is there potential for this to happen? Absolutely. Absolutely. So yeah, Matt, I think that, like you said, I think that's one of the biggest takeaways for this slide deck that we're going through here today. Talk to me about median price and where we are in comparison to other years and kind of how we anticipate this might carry through.
Yeah, I mean, at the beginning of the year, it looked like we were going to head upwards to where we were 23, 24.
Mm-hmm.
Again, consumer confidence rolled over a little bit. So did the prices. Now we're tracking back to where we were in the 2021 prices. Highly doubtful we'll ever reach 2020 prices just because of how much money was printed into the
Yeah.
system. But we could trend on the 2021 prices for a little bit until things start to change. But just like you saw in 2021, you can see prices accelerating to the upside. 2020, we had that little dip in the price, and then we started to move to the upside. And then we gapped up into 2021. And this is very possible in the market that we're in today, that once this gets sorted out, we're going to see an acceleration to the upside later this year that will move into hopefully a very busy 2026.
Yeah, and look at how that just took off. After we came out of that little slump in April and May, it just didn't look back for the rest of the year. It was a
Yep.
steady increase. We didn't see any of our seasonality. It just went.
Yep. Because consumers had confidence. Interest rates are going to come down 3 more times this year. Hopefully the bond market rolls over as well, and the fixed rates come down some more as well. Because I think to have a really strong market, you need fixed rates to be low too. People want to lock in to 5 years, right?
Yeah, very true. Very true. So we'll be watching to see as we see more movement there. I know when we were looking at our earlier slide there on Wawa, on average across those 10 lenders, we're down pretty nice. I think like 20 to 30 basis points at a minimum on some of those terms. So it will be interesting to keep watching and see where we go going forward. Like you said, that's more impacted by the bond market. And Matt, I know you love watching that. So we'll make sure that we continue to talk about that. Months of inventory. It's been a continued increase as we see more new listings come, even seasonally low new listings coming, because we're not having enough sales volume to filter out the old inventory. So we are almost at an all-time high, if not very close to it in terms of 2019 coming forward to where we were today. I think that people forget just because of how quickly the pandemic became the news, but this was a slow time in the market that we saw. We saw downward pressure on prices here. We saw a correction from the big run-up that we had through 2015, 16 into April of 2017 when all the changes were made with the Fair Housing Plan, different changes in interest rates and stress tests. But here we are today with 5.46 months worth of inventory, looking at freeholds again in York Region. All right.
I know you're a little tight on time, so maybe it's best. I know we left Simcoe off last month's chat, so I want to make sure for anyone tuning in from Simcoe that we do cover the Simcoe for them.
Thank you, Matt. We will definitely cover it. So let's whip through real quick, just high level condo market in York Region. Month over month, just up a little bit, 1.8% in terms of median price. Transaction volume up slightly. Again, if you are doing consultations with people and nothing's sold in the building for a while, you may have a seller that is still thinking about last year's pricing. We've come down about 5.5% there on average in terms of median price, as well as our transaction volume is continuing to drop. This is one of the higher numbers there, Matt. We're seeing 76% in termination volume as sellers and agents try to get the pricing just right there to figure out where the new market is. And Matt, on that note, we talked about this on our 2.5-hour video that we did last week that you can check out on the YouTube page that we mentioned at the beginning, youtube.com/economics of real estate. The big thing there when we're looking at what's happened with our year-over-year slowdown in terms of pricing and making sure that you get it just right is if you are the seller, you have to be the one right now that makes the market, not the one that chases the market down. If you are sitting out there with a bunch of competition in your neighborhood and you're waiting because nobody's making a move and then somebody accepts an offer that's much lower than you would have accepted, now they've set what the new market is. You need to be the one that's willing to sell under what yesterday's price was, but be strong enough to hold to your guns that you don't give away that price. But if you wait for somebody else to do it and they're in a more dire situation to make that sale, it's more likely that you now have to chase the market downwards instead of you stepping in and making the market.
I think if you're in a pocket where the product is all very much similar, now is the month where you're going to see people have to take lower prices because they need to get out, and you need to act before they do.
Yeah, absolutely. So in the condo world, again, we're just seeing lots of active listings. record highs over the last 14 years. Median price adjusting just slightly there, but staying fairly stagnant in terms of where we're at. We're not seeing too much fluctuation. And I think a lot of that, Matt, is because we're just not seeing the sales volume. So like we said before, some of the premier products, the family style condos, they are moving. And then the rest, they're just not selling. So they're holding out. Here we have our highs in terms of months of inventory. And it's interesting. There was a slowdown at the end of 2023 in the condo market as well, where we saw high months of inventory, because we're not necessarily at active listings being that high, but there was just such a slowdown in sales there as well, where that months of inventory really stacked up.
Yep.
All right, let's roll into new market freehold. Again, like you said, Matt, we want to make sure that we get to Simcoe today, and due to some scheduling, we are going to whip through this. So month over month in new market, on our freehold market, we saw a slight decline there in median price. And this is something that we watch municipality to municipality, where are buyers finding value. And there we see a 1% decline there month over month. And same story that we've been seeing across the board, Matt. Median price year over year, it's down a little bit more here in Newmarket. We're down 5.6% comparison to, like I mentioned with Aurora, was different when we were looking specifically at the detached.
Yeah, the transactions, what stands out for me year over year, down 51.6%. I think that's the highest for the freeholds we've seen so far.
Yeah, absolutely. Termination volume, not as bad. But I think that might be part of much less than what we've seen in some other areas. But I think that's also what's contributing to the challenge in sales, is buyers just haven't been seeing enough value there to make the purchase currently.
I agree.
New listings about where we would expect, no major issue there. Active listings, again, not our highest when we take a look at, what am I looking at here? 2012. And 2022 or 2019 at 270. Yeah. And then 2018 at 377 compared to our 216 today. So we are up in terms of what we would traditionally see, but not setting record highs there. This is the rollover, Matt, that you and I have talked about. This, you never see this at this time of year, not to this extreme.
Never. Yeah, and only the pandemic was the only other time you saw a rollover at this time of year.
Exactly. Everything else trending to the upwards, if anything, a leveling off, but never quite the rollover. And the rollover that we saw here was because we were not allowed to leave our houses. But there's the reminder of how quickly it can turn around. As we look at median price, we are down to just above the 2021 levels. Like you said, we're not going to get as low as 2022. But nonetheless, with that dip that we saw in sales volume, so we see the dip there in median sale price. Months of inventory, like the others, trending higher, setting new record over the last 14 years. Aurora freeholds. So coming into Aurora, and now here's the big one. This is including our towns and our semis, not just the detached like I talked about in the composite price. But when we look at our year over year numbers here for median price, down 9.4% in terms of price, down 2.4 over the month. Transaction volume up just slightly month over month, but down 51.5%. Similar there to what we saw in Newmarket there, Matt. But these numbers are very different. Talk to me about terminations.
Well, I'll start at new listings first, 76.8 month over month, which is a huge increase compared to any other place that we've looked at so far. Median days, up 15% a couple days, but it's the 185%. We went from just 27 terminations to 77. And then if we go year over year, we went from 22 terminations last year to 77, or a 250% increase, which is pretty staggering. And I think that's why we're seeing the over 9 months of inventory for detached homes in Aurora.
Yeah. And so when we come into new listing volume, again, we're up, but it's not record setting high in terms of that. There are still people that are sitting on the sidelines. Where we start to really see it come in is our active listings. And it's interesting to see, Matt, not as high necessarily, again, as 2018 and as 2019 being the 2 years that have surpassed where we were. And again, that's the reminder of that slowdown from the correction that we saw in 2017. Just shows that Aurora was not immune to what happened in York Region, where we saw so many Toronto buyers bring that Toronto money of record high sale prices as multiple offers were doing something that we had never really seen before. They'd been around, but not to that level, bringing that money north. And Aurora being one of those places, Richmond Hill, I think, being hit the hardest in terms of being overly evaluated in terms of the correction that needed to happen afterwards.
Yep.
Sales volume trending upward, Matt. We're trending upward.
So, better than Newmarket.
Better than Newmarket, in that sense that we are going up, but of course much lower than what we would traditionally see and way lower than what we've seen over the last 14 years. Our median price dropped just below 2021 now. I'd say if anything, that's the one indicator that we didn't see in a lot of neighborhoods where we haven't dropped below 2021 pricing. And here we are.
This is the only place that's gone below 2021 that we've covered.
Yeah, absolutely. Months of inventory, we got a little rollover. It'd be interesting to see if this carries through. Like we said, I think the forecast going forward, especially for April, is likely to be a little bit more of the same until the federal election's out of the way, until the new prime minister can start talking with the U.S. Likely that we don't see any major changes in that buyer confidence, which is the biggest impact that we're having in the market right now.
Yep.
Okay, talk to me the breakdown here that we did in terms of looking at just the detached, because in our previous charts, you got to remember we were including townhomes and semis as well.
Yeah, and that's going below those. All three of those together, those prices are going below 2021. So when we look at detached alone, we can see that it appears that we're having, the second best price month since 2020. But in reality, I think it's just there's so little sales on the detached side happening right now that it's most likely that the higher side of the sales, higher price side of the sales is
of
what's
the market.
driving this up.
Yeah.
Right. So I think if we had more sales, if we had 40, 45 sales, which maybe it averages out to, this price comes down lower, and Aurora is even a little bit weaker on sales for detached semis and townhomes than what we're seeing right now.
Yeah, well said. When you're looking at only 19 sales in a town like Aurora, where we have such a wide variety of housing and price ranges, where we've got quite the high side in terms of dollar value priced homes, that when you only have 19, this can look skewed. But you know what, Matt? I'm going to take it as a win. We are looking good in the detached market here for Aurora, as we are now just below the 2022 pricing in comparison, with a big asterisk beside it that says you got to remember we only sold 19 homes in I don't want to call us a big town, but in a town with a wide range of prices, that this could easily be skewed in that manner.
Yeah, I mean, if you're representing a buyer in Aurora, this is a good statistic to have, because you can go to the seller and say, hey, you know what? Prices are a little bit skewed this month in reality of where they're supposed to be. So, just in case they come back to you with, oh, look at the prices are accelerating.
Yeah, absolutely. Be able to break it down. All right, Matt, we did it. We got to Georgina. I have made alternative arrangements here on my phone, so we are going to make sure we get through Georgina and Simcoe today. Let's talk about where we are, starting off with median price. I'm going to throw it to you.
Yeah, so I mean, much of the same here. We've got an increase of 1.9% in Georgina. Transactions, though, down 11.8%. New listings, kind of on the lower side of what we've seen from a lot of other places, with 22.2% month over month. And then median days have actually come down to 15 from 20. Termination volume's not that crazy, 30% as compared to a lot of other places. But what's interesting is when you look at terminations on a year-over-year average, it's only 8.8%. So I think prices are a lot better. Properties are a lot better priced in the Georgina area right now than a lot of other areas that we're seeing. But year over year, 3%, that's not terrible. We've seen other places that are 5 or 6. I think transaction volume year over year is about average with everyone else, 32.8. That's mainly a confidence issue. But look at new listings year over year, actually negative
Yeah.
0.6. So that's a good sign for at least Georgina that they're not getting this massive year over year influx of property hitting
Yeah,
the
and
market.
like you said, when I see that termination volume so low in comparison to the other municipalities and regions that we've looked at, it's just a great sign that Georgina really has their pricing down when looking at the freehold options in comparison to others. And again, only being down 3%, nobody ever wants to be down 3%, but in comparison to the other areas, it's down quite tight. And we've talked about Georgina before, how they kind of took their lumps earlier on, and they seem to kind of get well adjusted a little bit faster to kind of keep that balance going with a little bit less of the swings that we're seeing.
Yep.
New listing volume, like you said, kind of right in the pack where we would expect to see. Nothing drastic. It's not like everybody's rushing to list their homes right now. And that's why we break these charts down into all these different categories, because you could easily just look at active listings and be like, Matt, that's all I care about. I just want to know how much competition I have out there. Well, hey, we also want to know what's the trend. Are we seeing a lot more people getting ready to list their home? What does that look like? Are we seeing those terminations? And that's why we take a look at these different charts. And again, when we look at active listings, no massive upswing like we've seen in some others, just kind of trucking along, acknowledging that our sales are not quite where they should be.
Yeah, and just looking at this chart, you can tell that Georgina is more of an April to June, or sorry, maybe even an April to
Yeah.
July, where they kind of peak out for active listings. Where a lot of other places are a little bit sooner, maybe between March and May. But this is a very steady up and to the right chart. Nothing terribly drastic there. If it keeps on that trajectory, we've had way, way, way worse years in Georgina than we're seeing now.
Yeah. And you know what that anecdotally sometimes says to me is everybody's selling their homes further south first earlier in the year, and then they're making their purchases as they travel north a little bit later in the year. And that's why when you're selling earlier in the year, it's more likely you're able to negotiate yourself a longer closing. All right, sales volume. We did roll over. We are not trending necessarily upwards in that category. And we are lower.
That's to be expected, I think, just because of the tariff thing that happened last month. If we take that out, we look at January, February, significantly stronger than a lot of other areas to start the year. It's just they've come into the trap that everybody else has, that everyone's kind of waiting on the sidelines. But that was a strong start in January, all things considered, for Georgina. And February wasn't terrible either. It's just, where we're at in this market. If the tariffs aren't happening right now, Georgina is having a much better time, which gives me the confidence that when these do get sorted out, Georgina is going to have a better acceleration because they don't have as much active listings sitting on the market as a lot of other places do.
Well said. And when we take a look here at our median price, affordability is a good factor there. We're looking at $800,000 for in median price when you're looking for us detached semis and townhomes. Like it's so much more conducive to first time home buyers that are out there. And so I think as this turns around, there will be more of those people flocking to Georgina to make those purchases. And like you said, I think it's poised to have a faster turnaround than perhaps some of the other areas we're looking at.
I agree.
Which I would throw that out there as well. If you are a buyer looking in Georgina, with the acknowledgement that this could turn around faster, specifically in Georgina, if you're out there shopping in April right now, and we know that some people need to sell, like now is your time to make that move, because I think that it will turn around faster. So your window, I think, likely would be smaller here than perhaps some other areas.
There's still enough active listings on the market to negotiate some good deals right now. And then when the market starts to move later this year, you're already in, you're already going to take advantage to the upside as soon as you move in.
Yeah. Other note for buyers that are looking in Georgina, another municipality that has dropped down below our 2021 pricing. So again, great opportunity to get in there now. Months of inventory, not setting like we talked about all the way through here, Georgina is not setting the record highs that we're seeing in other areas. Specifically in terms of months of inventory, we're hovering around 5 months. 5.0.
Now, as a chart guy, I would think that maybe we peaked out in at the end of 2024, and then or 2023, and we've made a lower high in 2024, and it's very possible we make an even we look like we're trending to the downside of months of inventory, where a lot of other places look like they're still moving to the
To
upside.
the up. Very true. Very true. It'll be interesting to see what happens. We are in that seasonal push where we should see more inventory come out, but like we said, it's not stacking up the same way over there. If we see buyers flock there as well because of the affordability, this may keep trending down as opposed to up.
Yep.
All right, Simcoe, everybody, we made it. We're going to talk about the freehold market. We're going to talk about the freehold market. Matt, I'm seeing prices fairly stable there, and a month-over-month way to only be down 0.2%. I see stability there. Transaction volume not moving much either. Our new listings up 45% on a month-over-month basis. Termination volume being about the same as we've seen in a lot of other areas, hovering around that 52%. And a little bit higher here on our year-over-year decrease in terms of median price. 6% is one of the higher numbers that we've seen. Transaction volume being down 40% year-over-year. New listings not down by much year-over-year. That's kind of interesting. But down as opposed to up year-over-year. I think there was one. Maybe it was Newmarket that saw that, but there's really only been one other location where we saw that kind of transition in terms of new listing.
Georgina. We did have the 45% increase month over month, but when you look at it year over year, the 45 doesn't seem that strong because we're down from where we were last year. But even if we look at the third column, which is, your January, February, March of this year compared to the same time period last year, for those 3 months, we're still down 2% on new listings. So it is good that we're not getting this overabundance of property hitting the market in both Georgina and Simcoe.
Yeah, that's a great point, to be down 2% year to date in terms of our new listing volume. Not bad.
And when we go to the next chart, when we're looking at the new listings volume, there's only 1 year that's had less new listings than what we're seeing now, and that's a great sign for ensuring that not too much inventory is piling into the market, which can really drive the prices downwards.
Yes, well said. So for those homeowners and sellers out there, very important note for you guys to be watching for. Active listings, again, right in the middle of the pack. Like, we're not seeing the extremes on the highs or the lows as of yet here in Simcoe. I spoke too soon. Here's where we talk about the tale of the day in terms of sales volume for the month of March. We're down 40%, and it's been pretty stagnant right through the year so far, January, February, and March.
Yeah, it has. And I mean, much like other places, and I would argue that like Simcoe didn't get off to the greatest start in January as well. It was kind of the lower end for sales, but it's gone quite sideways. But again, when we look at active listings, middle of the pack, okay, sales are terrible. But let's go to the next chart when we're looking at the median sale price. You're right in the mix there. You're on the same trajectory as, what is that, 2023 prices.
Yep.
Right. So you're right in that grouping of where we've seen the last couple of years. We're not falling, even with those low sales for 3 straight months. We're not seeing a massive downturn in prices there. Prices are holding steady. If you're a seller or you're working with a seller client in the Simcoe area, this is a fantastic time still to sell. You don't have this massive amount of other competition sitting there. You've seen worse in other years compared to this year.
Yeah. And for the buyers out there, our discussion about where median price may be going in Simcoe, we talked a lot about comparison to that 2020 year where everything got pushed. We didn't really have the spring market, just like what we're seeing so far this year. And we saw that move into the summer months. Now, in the last few years, we've seen median price really dip off kind of around July, right? Like if you looked at 2023 here, it looks like we're trending to kind of stay above what 2021 was. But then we trail off. We definitely have that downward momentum. And it'll be interesting to see if the second half of this year we see a boost in the market. Perhaps it may be one of the times that we overcome here on that 2021 pricing.
Yep.
Months of inventory, high, but not record high. Look at the months of inventory we were carrying back in 2011 in comparison to where we are now. Still a little bit higher than some of the others. We're closer to 6 months worth of inventory in comparison to the 5 months that we've seen in others. All right, let's get nitty gritty with Barrie, looking at the freehold. And we've actually seen a month over month increase in median pricing of 1.3%. We also see a couple more sales happen month over month, up 7.4, moving from 121 units to up to 130. And when I jump right down to that termination volume, as we talked about, like, are people getting it right in terms of their list price? Are buyers seeing value there? Only 34% increase month over month in terms of termination volume, up 55% from the year before. Makes sense. We talked a lot about how last year kicked off, but I will say, Matt, to only be down 2.7% year over year in comparison to the other areas that we're seeing, Barrie's looking quite good. They've kind of held their own in terms of that value.
Yeah, and I think last year, if anyone was following along with us, we were really talking about how the Barrie market really had gotten hammered early last year, probably starting around April into the summer, but then it started to rebound. It started to look pretty decent. We were talking about that. So I think they've gone through a lot of their pricing correction, and I think that they're more, their pricing is way more aligned than a lot of places that we're seeing in York region.
Yeah, absolutely. When we take a look at how we started the year in terms of listing volume, new listing volume, with terminations being on the lower side and just in general, not as people hitting the market, I think that's why we've been able to see their median price hold a little bit stronger, because we're not getting such a strong injection of new listings, especially in comparison to years past. And our active listings, again, we're kind of middle of the pack. Middle of the pack. That's right where they want to be. And of course, here's where we've seen the downslope in terms of the sales volume. We've seen that dip that we saw in February, just up slightly there in March, and of course down from where we were before. And I will say, all over the map here a little bit in terms of when their usual peaks happen. We see a couple in May, some in April, some in June. So really that April to June still being the big push where we see the most amount of sales happening in Barrie.
Yep. I mean, I think most of it's following the same as Simcoe, but it's showing that Barrie for sure is holding up well in this market. And even when we go to months of inventory, we've seen higher. We are trending upwards, but again, only 3.72 months of inventory, where we're seeing a lot of other places in the sixes. Like, they're basically in a seller's market. We are in a balanced market, but to the lower side of the balanced market.
Yeah. Yeah. And so, those ones that are up there in the sixes hovering very much in that buyer's market. Whereas, like you said here, we're chilling nicely in what would be much more balanced, leaning a little bit towards buyers as we get to the 4, but very comfortable at 3.72 months worth of inventory. Looking at Simcoe's condo market, not immune to the challenges of the condo market that we're seeing across the board. Nope. But I would say this is one of the biggest decreases in a month over month basis, specifically when we come into Simcoe's condos, down almost 6% month over month. Yep. And funny enough, down almost 6% when we look year over year as well.
Yeah. So, I mean, in March of 2024, it was the same price as what we saw last month. Yeah. So we're not crazy off. Maybe the fluctuation changes again next month, goes back up to the 510. So we'll see on that end. But yeah, transaction volumes down 24% year over year. It's the new listings, 54%. We saw an increase last month, but only 10.2 year over year. So not absolutely crazy. We've seen worse in other areas. But definitely a different picture than what you're seeing in the freehold side in the Simcoe area.
Yeah. Well,
this is primarily just Barrie.
Yeah. Yeah. To be fair. Yeah. We do see a bigger uptick, interestingly enough, from February to March in terms of our new listing volume. And here's where we get into the realm where, standing out among our last 14 years, we are more on the high side now, whereas some of the other stuff we've seen in Simcoe and Barrie in particular, more middle of the road in terms of new listings, but the condo market, we're hitting there at a higher level. And of course, that translates to being higher on the active listings, whereas we had seen some previously kind of hovering around the middle of the pack in comparison to previous years. Sales volume, Matt, I look at January and I'm like, not bad. If this tariff talk and everything going on with the economy and now our federal election hadn't happened, I think we would be in a much better place if we were holding anything true to how we started the year.
Well, if you look at January, where we started the year, only what, 3 months or 3 years have had a better start to the year than we saw this year. No other month, okay, from going from January to February has ever rolled over since 2011. I would imagine even further than that. That's just not the case. So just showing the impact of the consumer confidence here. Like, this market was set to go because I think prices are more in the range of what people are willing to pay.
Yep. Prices are in the range, rates are coming down, affordability is becoming better than it's been in the past. And it's just been this hit with buyer confidence, which is what makes me think that we're much more poised in a lot of our markets to see this quick turnaround. I'm not talking about the extremes of how high this goes up, but how quickly it goes up, I think, is what we'll see be the story as this thing hopefully turns around. And that does depend on a lot of factors. It does depend on the outcome of that conversation with our new prime minister and what's going on in the States. But if we get those signs of stability, this is what I think is going to happen. It is not a long-term, it doesn't have to be a long-term challenge that we're facing. I think a couple good news bites and some decisions that stay and don't get flip-flopped on every other week will make the difference. Coming into our median sale price, like you saw with the sales volume, we got that rollover from February to March, not as quickly as we saw there with the sales volume dropping immediately. February actually held its pricing pretty well in the condo market in Simcoe, right? But
I would argue we would just be a little bit off of where we were in 2023.
Yeah.
4.
Even 4. Yeah. We'd be right in the middle of those two, I think.
I think we would be right there in price wise, but just because of that fall off in the sales, it just hit it to 2021 prices.
I think this is a gift to buyers. And the unfortunate thing is that there's a lot of them that won't take advantage of it. And that's always the way it happens. Buyers will wait until the market is all positive news, and then they've missed out on that equity growth that they could have got had they bought in sooner. And I get it. There's always that nervous feeling. I don't want to buy something today and then find out it's worth less later on. But ultimately, when we go back to the big graphs and we look at how the housing market does over time, you don't have to worry about these month-to-month fluctuations, even the last 2 years of fluctuations. It's more so if we know that historically we're down here, why are we not going to buy now when we know that we're going to be back up there when this thing turns around? I guess there's some fundamental questions that people need to ask themselves. But when we look at months of inventory, it's got to be the highest we've seen so far, and at least what we've broken down today with 8.8 months worth of inventory when we're looking at the condo market.
Yeah, but you know what? It looks like a bit of a topping pattern here. Like, we're not breaking to the new side. We might be hitting a high right now. Even if we do break out above this number, like, there are circumstances that are a little bit extreme right now, so it would be like, okay, that's kind of why. But this is a pattern to me that's showing some resistance here, that there's buyers willing to come into the market and scoop these things up. So this is definitely a chart that could start looking like the left-hand side, where it starts to work its way down again.
Yeah, absolutely. We see a couple of those top bounce and then start to move back down. So that's it for us today. Thank you so much for joining us. If you want to get more of the content that we're talking about, more of this analytical stuff that we're breaking down, Matt, our next video is going to be talking about the different political parties and what their platforms are, specifically when it comes to housing. So we really look forward to talking to you guys about that. Stay tuned. You can catch us at youtube.com/@economics of real estate. Please check us out. Matt, any final words you want to say before we take off today?
Yeah, just for the agents, if you go to our YouTube page, we've broken down it's a 2.5 hour long video, but I've broken it down to everyone's region. So whether you're in York, Newmarket, Georgina, Simcoe, we have the video just for that general area that you can rewatch if you want to get a better idea of where the market's heading.
Well said. Well said. I think take advantage of this information and make sure that you're out there having fantastic consultations with your clients. They need guidance. And if you can't show them the way forward, they're just not going to take action. And there's nothing worse than looking back and being like, man, I wish those guys just could have bought when it was low. And then having that thing turn around and looking back and now you're struggling. And we've had those challenges in the past where people have been, anxious about getting off the sidelines. And sure enough, you buy a year later when median price has gone up 100,000, right? And that's kind of just the reality of the housing market. But we look forward to seeing you guys again next time. Check us out on the YouTube page. We are there every single week. And for KWRC, we will see you next month. Everyone, take care and have a great day.